Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about why a major breakout could be coming to Bitcoin very, very soon. As you can see, Bitcoin has been witnessing a major rally over the weekend. Bitcoin managed to rally this weekend all the way from about $110,000 all the way up to $116,000 relatively recently. Today, we're going to show you exactly how we were able to predict this movement with this chart last week, even giving you a trade setup where Bitcoin got perfectly up here to our take profit. And I'm going to share with you where we expect Bitcoin to go next. Most importantly, I'm going to share with you where I think Bitcoin is going to be, when I think Bitcoin is going to be going back to all-time high. So without much further ado, let's go ahead and dive right on into it, guys. Bitcoin over the last few days has put into play, the last month and a half or so, an Elliott wave 1, 2, 3, 4, 5 pattern. As you can see, we have our 1 wave, our 2 wave does not go below the bottom of the 1, the 4 does not intersect the 1, the 3 is not the smallest, so this is a perfect 1, 2, 3, 4, 5 Elliott impulse wave. We've been talking about for several weeks now, about a week and a half, that Bitcoin was most likely going to see an ABC corrective wave, just like we have on our other primary chart over here. We talked about how Bitcoin was going to see this. We discussed how Bitcoin would probably drop back down to the 0.618 Fibonacci level here at 107, which Bitcoin did do. We then saw Bitcoin manage to rally up here above this resistance at 110,000, and it went on to our first and most obvious price target, which was 116K. As you can see, $116,000 was the level that Bitcoin rallied up to back here on October the 13th, following the 1010 crash, down to $103,000. Us rallying back up here means that Bitcoin very well could be creating a major inverse head and shoulders pattern that could allow Bitcoin to rally higher. So right now, we really have two different scenarios that Bitcoin can play out. Either one, Bitcoin could just take the extremely bullish approach of breaking through 116 immediately. If it does so, $126,000 all-time high will most likely be tested within 30 days. This is a call we've already made on X. You can go over there and check that out. If we manage to start closing, as far as spending a few days up here, we've got a lot of volume. It's going to be important that we see volume. We're in the week now, so that's good. If we start to see volumetric closing up here above 116, above 117, above 118, then that's where we would say that Bitcoin is most likely going back to all-time high. The reason for that is because if we pull a Fibonacci off of this entire correction, we expect for Bitcoin to rally to the 0.618 before dropping even lower. That's what you would expect from an A, B, C correction. You would expect the back test down to 0.618. Remember, we did the exact same thing in the inverse down here. When we were in the B wave, we expected a back test down to the 0.618. This 0.618 at 107 is the same 0.618 back test as we're witnessing right here on what could be a B wave correction. So it really does all come down to whether or not Bitcoin is going to be able to break above the 0.618 Fibonacci level here and this previous level of resistance, but most importantly, the Fibonacci. If Bitcoin does break here above the 0.618, then that means something very powerful. That means that this is not an ABC corrective wave. That means that this is a new Elliott wave impulse to the upside that would look something like this. 1, 2, maybe 3's up here, 4 might be down here, and 5 could send us right back up towards all-time high. So the decision point around 116 to 118, hopefully you can tell, is very, very important. If we manage to break above 0.618 on the Fibonacci here, then that means that we're most likely not in an ABC corrective wave, which might fall over back down towards 94, but instead we're actually most likely going back to all-time high. Now, let's analyze why that might happen. I'm going to run through one of the tweets that I did earlier because it's just very simple to go off of. I posted this over on our X at CryptoJeb. If you haven't followed me, make sure to do so. Bitcoin is ranging at all-time high for at least a year. We have held support on the logarithmic uptrend at 103K, which I'll talk about in a second. We have the most successful ETF launches in history for Bitcoin. We have enormous institutional demand. We have the president's family intentionally and publicly admitting to manipulating the price of Bitcoin higher. We have gold breaking below $4,000 per ounce, which is something that we're seeing take place right now. If you look over on gold, at the very moment, gold is on a trajectory down towards probably $3,700, which leads way for Bitcoin, of course. S&P 500 is flying to new all-time high. We know that Bitcoin is positively correlated with the S&P. Quantitative tightening is coming. I should have just said QT is coming to an end, right? So quantitative tightening is either going to be announced that it's ending on Wednesday when the Fed meets, or we will probably see that announcement at some point within the next 3 months. We've already been basically told that it's coming. We just don't know exactly when this is going to happen, but most likely it's within the next 3 months. We have rate cuts coming. We have inflation that is out of control. We have American people being fed up with inflation, more so than they have been since the 70s. Why would you be bearish in a situation like this? All right, let me give you a couple of other reasons. I also posted this chart, not this chart. I also posted this chart on X earlier, which is something that I call the digit cycle. This is a theory that I am working on in the cryptocurrency market, and I'm basically just going to read it to you as well because we posted this over here. If you guys have not followed me on X, you absolutely should. 2026 will be a monstrous year for Bitcoin. It's not 4-year halvings, it's the debt cycle and the digit cycle. And essentially what we are seeing is that Bitcoin has spent a total of 152 days above $100,000. That is far longer than we have ever seen Bitcoin spend in a new digit epoch, if you will. 1,000 to 100, 1,000, 10,000, 10,000 to 100,000, 100 to $1,000. You have these different epochs, right? Bitcoin spent, spread out over the course of 3 years, 181 days above $10,000 before it left behind $10,000 forever, never to return, as you can see on the original chart right here. See? We spent 181 days up here before we left behind $10,000 and never came back down to it. Right now, Bitcoin has spent 152 days, not spread out over 3 years, but over 1 year, above 100K, and the stretch of time that we've spent above 100K is now 115 days long. In history, the longest that Bitcoin has ever spent above a new digit barrier, such as 10,000, was over here when we spent about 90 days. And then we didn't actually break above $10,000 for the long term. So if you look at the digit cycle, it becomes very obvious that Bitcoin is gearing up to leave behind $100,000 forever. That's where we're going. Now, let's talk about another reason. Here's another reason why I believe that Bitcoin is going to have an exceptionally bullish year. If you come into Bitcoin and you overlay the United States Central Bank balance sheet, and you look at the Federal Reserve and their quantitative tightening and the quantitative tightening policies, whenever you see inflows, let's go into a different chart here. Whenever you see quantitative easing take place, this is when bull markets are taking place. When quantitative tightening is taking place, this is when bear markets are taking place. And let's not even make it this generic. Let's actually zoom in. If you look here, when did we end quantitative tightening and when did the bull market end? We had this bull market support uptrend here in 2017. You can see the exact moment when the Fed started rolling off the balance sheet is when Bitcoin confirmed a break beneath the uptrend of the 2017 bull market, which led to the confirmation of the 2018 bear market. This was not a 4-year halving cycle driven event. It was a macroeconomic event based on the liquidity cycles at the Federal Reserve. Once again, if we come over to our last bull market, when the last bull market ended, right? When the last bull market ended, Bitcoin was sitting pretty right here above this support band, this parallel channel. And what will you know? As soon as quantitative tightening began, that is the exact moment that Bitcoin began the actual bear market. This was not bear market. If you'll notice, we didn't even talk about this being bear market at the time. It was healthy consolidation. When we saw QT began, because we were thinking that they were just going to hold it here, but they actually ended up going through QT. When QT began, that's when Bitcoin started to correct. So in history, if we just kind of overlay these two events, we will see that the beginning of the bear market, the last two bear markets, which are honestly the only two that are really statistically significant, because when you start getting back to this period of time, it's just not as important. And even then, this bull market ended when QE ended. It was not a downtrend, but it was an end of an uptrend, right? So, I mean, you see the same thing right over here, right? There's this change in character at the Fed as it relates to quantitative easing and tightening. The quantitative easing ended, we went flat, and then Bitcoin stopped rallying. So every single bear market has had one of these conditions, and the last two have been characterized by quantitative tightening. So if bear markets are typically characterized by quantitative tightening beginning, then why in the world would we think a bear market is starting right now when quantitative tightening is coming to a conclusion? And we know historically from this part of the chart, from this part of the chart back here, and from this part of the chart, and also from what we expect now, whenever you see QT end, QE is right there behind it. If QE is generally driving Bitcoin to the upside, quantitative easing, the expansion of the Federal Reserve's balance sheet, why in the world would we expect the bull market to end now without there being at the very least a blow off top or possibly a super cycle? That just doesn't make sense to me because the 4-year halving cycle is based on the block reward, and the block reward is already almost negligible to the actual value of Bitcoin because the inflation mechanics of Bitcoin are such that we've already released 20 million of the 21 million Bitcoin that are ever going to be circulated. So what does it even matter what the halving is doing? All that does is impact miner profitability. And at the same time, with the halvings going the way they are, it just makes the miners more efficient. So it doesn't make any sense anyway. The 4-year halving cycle has never made any logical sense. But what does make sense is that the money flow in the United States economy, as governed by the denominator of the entire economic equation, economy over dollars, tells us that if you adjust the denominator, right, you make money cheaper because you drop the interest rates and you increase the liquidity in the market through quantitative easing, or at the very least rolling off of quantitative tightening, you allow for people to invest in the rest of the market. Let me make this more simple without the word soup. If you have $10,000 a month of income and you pay $2,000 a month in interest on mortgages, car payments, etc., and your interest rate drops by 20%, all of a sudden, instead of spending $2,000 a month on interest, you're spending $1,600 a month on interest, which gives you $400 a month back. What are you going to do with that $400? You're probably going to go and spend it. You're either going to buy a muffin with it, you're going to go invest it in the stock market, you're going to put it into Bitcoin, you might pay down your house, you might spend it somehow. And when you spend money on something, you are investing in the company that you are spending in because you are increasing their profits. So whether you like it or not, just interacting with the economy drives the stock market, which also drives the risk on attitude that leads to investment in Bitcoin. So when you see rates come down and you see liquidity get easier, what ends up inevitably happening is that you see Bitcoin break bullish out of this zone in what amounts to one of the largest inverse head and shoulders patterns in the history of Bitcoin, and you see Bitcoin go absolutely freaking parabolic. And so when you understand all of these long-term forces, you understand that the government is intentionally trying to screw you over and manipulate the value of your currency, and you understand the short-term factors too, you begin to realize that if Bitcoin is able to hold above 116 and Bitcoin is able to hold here above 0.618, then we are most likely going to go right back to all-time high with aggression. If Bitcoin does reject from this zone, that's okay, because we have an uptrending level of support right here that Bitcoin could very confidently fall back down towards, bounce off the 0.382, establish higher lows, and redefine the trend. We have one high and we have a second high. We have one low and we have one low. We have an established uptrend on the hourly chart. If we manage to fall back down to 110 to fill the, for example, CME futures gap, which probably will get filled, to be quite honest with you, down here around 111 to 114, then that gives us all the support architecture that we need for Bitcoin to start moving higher. So at this point in time, I am the least confident in our $94,000 call that I've ever been. And part of that is because there are two different types of calls that we need to look at. And they basically boil down to this. On the logarithm chart, you have an uptrending level of support right here. This uptrending level of support actually gives us bull market support. Let's just delete everything except that uptrend. This bull market uptrend of support gave us support when we dropped back down to it at 103,000. Bitcoin bounced off of it perfectly. None of these bottoms managed to get us low enough, right? None of them did, except we did manage to get low enough here. So it's possible that this bottom was different and Bitcoin is now leaving behind sub $100,000 forever. Now on the regular chart, and this is where we've been analyzing, we've been saying that Bitcoin will probably drop back down to the linear chart uptrend. But if Bitcoin is beginning to go parabolic because it has a steady continual average growth rate, it makes sense that it would be following a logarithmic uptrend. So it's possible that we're wrong. It's possible to say, hey, Bitcoin's never going to revisit this trend line in the same way that Bitcoin never revisited, for example, this trend line. That is acutely possible, something I'm very well aware of, and something that may end up invalidating our theory of a $94,000 to $100,000 drop. And if it does, that's okay. Overall, the theory is sound. We dropped back down to the bull market uptrending level of support. We just dropped back down to the logarithmic uptrending level of support rather than the linear uptrending level of support, which is honestly just a point in favor of the bulls because Bitcoin didn't need to retrace as low as we thought it would to get the exact same effect of bottoming. All of that to say, I am dollar cost averaging into Bitcoin all day long, and I dollar cost average every single day. On top of that, I'm constantly looking for trading setups in Bitcoin. And like I said, last week, we found one. As you can see, we drew this trade setup right here last week with an entry right here, an exit right there, and a take profit right there. This was a 5.36 risk to reward ratio trade that actually hit. If you guys want to see more analysis like this, you should definitely make sure to sign up. You should definitely make sure to subscribe to the channel, but you should also definitely make sure to sign up for Femex. And before you click away, I'm going to give you something because I really, really, really want to see you guys succeed. If you guys have not already signed up for Femex, you absolutely should. And the reason that you should sign up for Femex is because Femex is an exchange that's going to treat you well. And on top of that, if you sign up for Femex, I am currently working on a course, and you're going to get it for free. A little miniature trading course that you're going to get access to, and you can only get access to it by signing up for Femex. I'm going to break down the exact chart formation that we used to build this trade out over the last couple of weeks. I'm going to show you exactly how to do it. It's based on Elliott waves. It's based on Fibonacci, and it's going to give you a solid understanding of how to set your stop losses, how to set your entries, how to set your take profits. And I'm going to give you this course for free if you sign up for Femex. Femex is an incredible exchange. They were very good to their customers on 10/10 when we saw a $20 billion liquidation. There wasn't any downtime. People were actively trading in the middle of that crash on Femex. Liquidity was strong. The market makers did their job. You were able to go into leverage longs. You were able to have your stop losses triggered. People were not unfairly getting liquidated, etc., etc., etc. Femex is a phenomenal exchange. If you guys have not already, make sure to sign up for them. And the main reason we brought them on as a sponsor is because they took good care of their customers on 10/10. People did not get screwed over by Femex. If they lost money, that's simply because they were not using stop losses. Stop losses triggered. The market didn't flash crash through them and just not even fill them. Femex did a good job for the customer. So make sure to sign up for Femex. And here's the bottom line, guys. I want to make this really, really simple. Here's the bottom line. If Bitcoin holds above 0.618, we're going back to all-time high. If it rejects, we're probably going to crash down to 94,000. It's do or die, baby. We've got the Federal Reserve meeting coming up on Wednesday. Is Bitcoin going to rally up here into the Fed meeting, go through a massive crash? At that point, 94K looks a lot more likely, but there's also still the possibility of an inverse head and shoulders pattern forming here. So stay tuned. We're going to continue to analyze this, and as we have more information, we will share it with you right here on Climate of Crypto here on the Crypto Jev YouTube channel. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, stay tuned for more trade setups. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.